we're so color coordinated. I love it.
Aren't we?
Super. Good morning, Julie.
Good morning.
Today, Julie and I are discussing reverse mortgages. Julie Jackson, CMG Home Loans on the beautiful island, Whidbey Island, located Oak Harbor. I am Anita Johnston, and we wanted to discuss reverse mortgages. And why? Julie, do we want to discuss reverse mortgages?
Well, because people have a view or a theory of how the reverse mortgages work, and it's not actually quite accurate. And what we're finding is a lot of our seniors aged 62 and older, which is the requirement for a reverse mortgage, are unable to live in their homes even if they own them free and clear due to the cost of living.
Wow. So the cost of living, insurance, heat,
Food,
the car, the insurances. I was just going over this with my mother. And so she is at the point of moving into assisted living. And so she was discussing, she still has her house that she's carrying. And that it was, coming into 2025, she's going to have the insurance on the house. She has the insurance on the car. What does that look like? So reverse mortgages. If I bring that up to my mother, she's just gonna that's the devil. So is it different than today in 2025 compared to when reverse mortgages first came out?
So there are a lot of protections that are built into it.
Okay.
Housing and Urban Development is the overseer of this product.
Okay.
And it is an FHA product.
Super.
So it is a government regulated product.
Okay.
In order to originate these loans, we have to go through hours and hours of certification and recertification.
Okay.
And for our clients then, we usually meet several times before we come to a completion.
Okay.
So the reason for that is because there is a lot of misinformation in the world, and the reverse mortgages do not eat up all the equity like people think it does. So people think you're going to get a reverse mortgage, all your equity is immediately gone, and you've got nothing left. And that's not true. It's actually limited to about 33%.
Okay, that was going to be
the value of the home. And you're limited on how much you can even take out.
Okay.
So the first year, it will be just a little bit of a percentage that you can take out. And then after that, it's a little bit more. And it comes with an equity line that grows over time as well. So it gives you some more flexibility with that.
And it grows with our regular appreciation of housing then.
It grows based on mortgage insurance.
Mortgages.
So there is no lie,
Wow.
it's expensive. It's expensive.
Yeah.
It is a 2% of the appraised value up front that gets financed into the loan amount.
Oh dear. Okay.
And then monthly 0.5%. And that's what helps to grow that credit line.
Okay. And that's what allows this to actually, a reverse mortgage be able to be a thing, right? Is because there's so many protections on it now.
Yes.
Compared to when it first came out.
Right. Right. Yeah. Yeah. And with a reverse mortgage, you can make a payment if you want to.
Okay.
But the reason it's called a reverse mortgage is because you don't have to make a payment.
Okay.
So it's the reverse of what we call a forward mortgage, which is just a regular mortgage. Is a forward, you have to make a payment every month. With the reverse, you don't. So what happens is as the interest accrues, the balance goes up.
Okay. Okay. The balance on what is owed. Okay. So, we all have all the scary little scenarios in our head. And, you said that there's a certain amount that someone could take out. How do they figure how much you have to pay and for how many years? Let's say I'm planning on living to 100. what's our criteria of an age, and then what does it look like if, let's say, I have 500,000 equity in my home? How do we get an idea of when we could actually take advantage of this, and how much money's, what if I want to put a whole new roof on a house and I need a whole new furnace? Can I use this program to take care of those things?
Oh, yeah.
Okay. And how does that look like then? If I am, let's say, 62, can I do it?
Yes.
Okay. Is that the criteria?
To be 62 and to have enough equity in the home.
Okay. How do they figure enough equity?
It's based on age and the value of the home and what is currently owed on the home.
Okay.
So there is a calculation that gets done. It is not something that you can just take a pen and paper out and figure out on your own.
Okay.
You have to actually go through the process to determine what that looks like.
Okay. So reverse mortgages, it feels like it's a headache. Is it?
It's a lot. It is a lot.
Okay.
And I think the reason it's a lot is because people are not used to it.
Right.
Everybody's used to, I put down a certain amount of money to buy a house, and then I'm going to make a payment every month.
Yes.
Yeah. Or I'm going to refinance my house, and I'm going to make a payment every month. And what people are not used to is, I'm going to take out a mortgage, I'm going to buy a house, or I'm going to refinance, and I'm not going to make a payment. And letting that be okay.
So scenarios that this would work for, let's say if we had a couple that bought a house, one of them passes away, that their income might change from what they're receiving monthly. Would it work in that scenario for the one surviving spouse to be able to stay in the home?
It can. It can. So a reverse mortgage still has some qualifications. It's not just you own a home and you've got equity and you're age 62.
Okay.
You still need to be able to handle your regular finances. So you still have to pay your own insurance, your own property taxes. At least the way that we normally do it. There are some reverse mortgages where you can set it up that the company makes those payments. It's just easier to do it this way. And then if you have other monthly bills, you need to be able to handle those as well. So there is still an analysis that takes place to make sure that there's a qualification, because we don't want anybody to be in a bad position, mortgage-wise.
Okay. And then another scenario, if someone is barely getting by monthly and they have to put in money into the house for the new roof, new furnace, could it be used for a regular maintenance to do work on a house, or if it needs all new siding, could it be used in that kind of scenario also? You
can use the money for anything you want.
Okay.
Anything.
Tahiti?
Tahiti.
Oh.
Tahiti works.
It's not necessarily how the program is, set up, right?
It could be. It could be. Maybe you need to have money set aside for a future expense that is coming.
Right.
And so you can take it out for that. You don't have to fit within a certain box to access the funds.
So even if your car is dying and you have to get a new vehicle.
Yes.
Okay, have to get the new siding, the new roof. Your house has had lots of delayed maintenance. You could do this then. And and in my head it keeps coming back to, it's a way for someone, a senior, to stay in a home.
Yes.
Or to even do the updates so that the house is an age-in-place home. Perfect. Because, I know my mother, and, most of our seniors were around when this program was first introduced, 20, 30 years ago. And there wasn't quite the controls that there are today. So I think it's getting over all of the scary skeletons in the closet of past reverse mortgages, and really educating our seniors on that this could be a great product to age in place or adapt a house so that you can put in a ramp that you can stay in place and not have to move into a home because your house has too many stairs, or well, and it leads me into another question. What about buying a different home? What if you had a reverse mortgage and you want to then sell it to buy a one-level rambler or a condo without any stairs?
Yeah, you can do a reverse for purchase.
Okay.
So it's the same theory. If in this scenario you sold your home, you would take the equity from the sale of that home to put down in the new home, and you can have a reverse mortgage on the new home as a purchase.
Okay. And then do you have to sell the first house? Can you keep that first house?
In most cases, I'm going to say you're going to sell that house.
Okay. Could it be used as an investment property to help subsidize?
It could.
It's another video.
Yes. There you are, setting me up. We didn't talk about that.
It's one thing I love about Julie and I. We're always looking at ways to use real estate as investment. How do you use your current house to help you survive, as you're aging senior? Can someone help pay off your mortgage? So that's what I love about Julie and I, is that we're always looking at different avenues of how to make our houses not just a place to live in, but an investment. And so sorry for just throwing that at you.
Okay.
Can you think of anything else as we're wrapping up that you want to throw on the end of this?
Not that I can think of.
Okay.
No.
Super. Well, once again, Julie Jackson, CMG Home Loans. I am Anita Johnston, and we're both on the beautiful Whidbey Island, state of Washington, and I can also be found on my website, which is movetowhidbey.com. So all of you, if you're having a hard time stomaching reverse mortgages, feel free to buzz Julie. She is just phenomenal with all things reverse mortgage, and you've done a lot already for this year, last year, so she's not new at it. She has several that she's already conquered, and if you have questions, definitely reach out to either of us.